Hello, everyone, and welcome back. Um, this may be very basic for many of you, but I think it is worth talking about because we have people of all levels of experience, and we don't know who understands candlesticks and who doesn't. So I think it's important to just understand the basic fundamentals of how you even read a candlestick chart. So let's get into this. First, we have a green candle and a red candle. Sometimes you'll see these represented as like in black and white newspapers, for example. It might be presented as having the up candles being hollow, so just a line around, and the down candles being filled in like solid black. Generally speaking, though, these are going to be red or green. Green obviously meaning up, and red meaning down. In the case of a green candle, what that indicates is that the bottom of the body is the open. The wicks on each end represent the low and the high during that period, and the top of the body represents the close of that period. So this could represent 5 seconds or 30 seconds or a minute or 15 minutes or an hour or a day or a week or anything in between. But what it means is, like, let's just say, for example, that this is a 1 hour candle. So we're going into, 3 to 4 p.m. What that means is that at 3 p.m., price was here. And at 4 p.m., price was here at the close of this candle. And during that period between 3 and 4, price reached a low here and a high up here. For red candles, it's just a reversal of the body. So the top represents the open of that period, and the bottom represents the close. The wick, of course, is, again, still high and low during that period. So it might mean we opened here at the beginning of however long this length of time is, and we closed here at the end of that period of time. Candlestick data is fractal. So here I painstakingly recreated showing the same data set, but this is imaginary, of course, but over 5 different time frames. So for example, we have a 1 hour candle. So at the beginning of this hour, we opened here, the low was here, the high was here, and at the end of that hour, we closed here. Now, we could break that hour into two 30-minute candles. So again, same opening point at the beginning and end, because it's still 1 hour, but now it's broken into 2 separate candles, or 4 15-minute candles. Still the same data, exactly the same data being shown, but this is giving us a greater degree of detail of the high and low during subsets of this hour, broken into 15-minute chunks, or 6 10-minute candles, or 12 5-minute candles. Again, all of these would be the same hour. Fractals are a mathematical concept in which there is it's a geometric shape that's computer generated, and it's infinitely detailed. If you've never seen one, let me go to let me just find fractal. Let's play the first one that comes up, and I'm going to mute it in case there's copyrighted music. One moment. How do I switch this to all right. Here we go. So this is a computer-generated fractal, which is to say a geometric shape that no matter how far you zoom in, it becomes infinitely more detailed, and you can never zoom in all the way. It just keeps getting more and more detailed, and you can't zoom all the way out either. You can keep pulling further and further away and seeing a bigger and bigger picture, or vice versa. You can keep getting more and more detailed or less and less detailed. And some of you may be getting a little bit dizzy right now, so I'm going to turn this off because I am. So with fractals, it's a very important concept to understand that there can be important details hidden within larger time frames. And it's with trading, it's kind of a balance, because if you're looking at a 1 minute chart, you're going to miss big picture details. And if you're looking at a weekly chart, you're going to miss shorter time frame details that might also be equally meaningful when you're talking about technical analysis. Obviously, this is, I'll say, fractal-esque. It's not a true fractal in that there are practical limitations to how far, how large a time frame you can make a stock chart, or a candlestick chart, I mean, or how close in you can get. The smallest I've ever seen is, I think some currency platforms go down to 5 seconds. 5 seconds per candle, which is a completely impractical time frame. Like, no one serious is going to be looking at that. That's beside. Most serious platforms generally don't give you any more detail than a 1 minute chart, which is still really actually too small, generally speaking. And of course, the furthest out you could ever possibly go is the entire length of time that any given security has been trading. You could turn the entire trading history of something for all time. You could take the entire S&P and make one candle that's a 100-year candle, or however long it's been. The S&P has been an index. So that, again, also would not be the most practical, and we couldn't go any further out than that. But this is a very important concept to understand, as far as not losing the forest for the trees, if that makes any sense. Let me see if I have anything else to talk about here. We'll go into trend next. I will look forward to seeing you guys in the next video. I thank you for watching, and please feel free to email any suggestions or questions that you have, and we will produce a video addressing those specific things. Thank you.